Hi, Rob.
Hi there.
Let's cut to the chase straight away. Dollar yen. Dollar yen, this of course goes back to February 2011. And as you can see, we've sort of gone down and we're heading back up again, as in the dollar is rising once again. Rob, what does the chart tell us?
Yes, well, I mean, dollar yen, Japanese yen generally has been the mover and shaker for 2012, and this has been part of a long-term major cycle reversal, one that we anticipated early last year, just after the earthquake in Japan. And we can see here that we've had two impulsive moves.
This is the yellow line.
The yellow line, absolutely, the yellow highlight. In February and March of this year, we had a 10% move in just 7 weeks.
Yes.
And then just very recently in October and November, running into this month, a 7% move in just 8 weeks. So these are very big, strong moves that we tend to only see when there's a big shift in the cycle.
And today we're around 82, Ron.
Yeah.
The psychological level, the key level is 80, but the 2012 peak is also very important, isn't it? 84.18.
It is. I mean, at the moment in the short term, we're currently overbought, or the trade has been overcrowded.
Yes.
And so we're likely to see some unwinding from those levels. But I think, I mean, looking forward, we should really see a confirmation above the 2012 peak at 84.18.
And if we break that, what happens then, Ron?
Then we see much higher moves into 85 and above. But
do you think that you're not? Are you confident of that? Is that
very confident?
Oh, you are
that
confident
we
of that,
see that against the dollar, but also a broad-based weakness.
And we'll talk about the euro.
Japanese
I mean, it's a big week, isn't it? With the elections, with the Bank of Japan meeting as well. So many factors. But has the move in the yen as a haven currency, is that changing, Ron?
Well, the way that we look and trade at the Japanese yen is going to change, and as a consequence, this is what the technical signal suggests.
Yeah.
So the capital flows will change, and so that carry trade is likely to change over the coming months.
Let's look at the Nikkei, Rob, because you're looking at the correlation between the Nikkei and the yen. So basically, the yen is weak, the Nikkei rises, and vice versa.
Yes.
And this again goes back to the end of 2011, Rob. What's the Nikkei chart telling us right now?
Well, right now, I mean, it's popped up higher just above this channel that we've been in, moving sideways over the summer. But the key correlation here, which is traditional correlation, is the weak currency in Japan is generally good for the competitiveness, good for the exporters. And so we've seen that positive correlation happen again, but it's strengthening. What is interesting here is that we have this breakout. If sustained, it will likely test higher, because if we also look at the Nikkei relative to other stock markets, notably the US, we're at multi-year extremes and likely to have some mean reversion. So that would be favorable for the Japanese stock market recovery.
And if I remember, Ron, is this lower lows, higher highs? Yeah?
Absolutely.
I remember those. I remember from your lessons many years ago.
Absolutely, and it's a rising channel basically, which has already broken up. We just need to get further confirmation higher. And
how high could we go if we get further confirmation higher? What sort of levels are we looking at here? I mean, is this 2012 peak? That's the target, is it? It's very much a target area at around 10,260, and certainly on the dollar yen, the peak there and the peak here are two target areas. Right. For next year. Okay, that's the Nikkei. We talked about the dollar yen. Ron, let's talk about the euro yen, because you say a 4-year breakout pattern has occurred. So talk me through this. This goes back to 2008, by the way. So this is euro yen. You can see the trend, but the euro is just rising once again. The yen, of course, has been rising. The euro's been falling, but recently the euro's been rising against the yen. So what's going on, Ron? Well, it's a broad-based Japanese yen weakness, and we can see it across Japanese yen weakness against the dollar, but also against the euro. But if we look at the euro, there's this major breakout pattern which tends to lead to a high volatility on the upside here. We need to get a confirmation above 111.42, again, the 2012 peak. But what is interesting, there's a little bit of deja vu between euro yen and dollar yen. If you were to look at a 5-year basis, a similar pattern breakout. So that there's a historical parallel here in terms of yen weakness against the euro. Rob, let's finish with gold. And we're looking at the gold in yen, not gold in dollars, gold in yen. And this, again, you say, very positive signal includes the upside breakout. We talked about the euro-yen breakout, and we've got a similar thing occurring here, haven't we?
Yes, and I mean, in technical analysis, we tend to look for confirmation across different markets or signals, and so here we have cross-asset class confirmation of yen weakness against gold. And of course, this is so significant now because, as all the viewers know, for 2012, gold has basically been asleep,
yes,
moving sideways against the G5 currencies, the dollar, the euro, sterling, and various other currencies. But here we can see actually a breakout to the upside within this sideways pattern. Again, the 2012 peak is another confirmation,
yes,
and that could then lead to all-time highs for gold in yen terms.
In yen. And just off the cuff, gold in dollar terms? All-time highs, gold in dollar terms. Could we head back to those all-time high levels of around 1900 possibly next year?
Eventually next year, that is my view, long-term cycle, resumption of the long-term cycle upside. But I think at the moment we've just been pushing to the upside, rejecting it time and time again. So I think at the moment it's better to be cautious on gold in dollar terms. Gold in dollar terms,
but gold in yen terms, as Ron says, record highs. Thanks, Ron. Thanks for joining us today. Ron William there, founder of RW Market Advisory.